Alrighty guys, thanks for clicking on this week's video. Today we're going to go over the 5 worst trading strategies that you can do. Now, a quick little disclaimer, there's always value in most things in life. So even though these are the worst trading strategies, there's still some potential upside to them. So we'll go over that too. All right, but first things first, here's the worst trading strategy, the worst one. This one is called the dart method. And basically what you do is you take a dart, you print out a bunch of random ticker symbols, you hang it up on a wall, and that's right. You throw a dart at it, and whatever it lands on, that's the stock you buy. The reason I bring this up is because I still see people do this, believe it or not. Yes, I'm not going to name any names, but this person did it with a Scrabble set, and they proclaimed that the stock market is all chance. And so what he did was he reached into a bag and he picked out random letters, and whatever random letters he got, he would organize them in a way until it gave him at least some ticker symbol, and he would buy those shares. Now this guy's a multimillionaire, so obviously he has a direct influence on the market, and he has a huge following. So again, he has more direct influence on the market, especially since he's buying the stock first and those people are buying it after him. So dart method, Scrabble method, any method like this, pretty bad. The second worst trading strategy I want to talk about, and by the way, these are in no particular order, they're all pretty bad. We call this the tip picking trading method. And basically what it is, it's the one where you're like, oh, you should really buy this stock, and you hear it from your friend, or you hear it from your taxi driver, or anyone that's not really credible whatsoever, and they're telling you to buy these stocks, and you not knowing that and not wanting to take the blame for yourself and why you lost the money so you could blame someone else, you end up buying the stock anyways. The third worst trading method that I want to talk about today is what I call the educated tips. Now, just like the last one where it's like, oh, all these people are saying it, this one's also kind of bad because it's what the professionals are saying. And sometimes they're not even shy about it too. They're like, hey, I actually don't own any shares in this company, but you should still buy it. Sorry, I meant to say that they own shares in this company, because they do have to disclose that most of the time. That they own shares in this company, like, hey, you should buy it. And it makes you feel good because you're like, oh, well, they own it. Maybe I should own it too. But sometimes they'll dump their shares, and that's the whole point of doing this. So this goes with, TV professionals, YouTube professionals, anything like that. I'm sure they're coming from a genuine place. I'm not saying that they're doing that because, like, oh, I'm trying to do a pump and dump. But just keep in mind that the crowd psychology mentality, that if they have a huge following, remember, they're going to have a huge influence on the market. So just keep that in mind whenever you're picking stocks that are, this person's got like, hey, buy this stock, and they have like 20 million views. Just keep in mind with that. The fourth trading method that I want to talk about is called broker picking. The reason this one is bad, and I would assume most people don't do it anymore, but just in case you still do it, because you do have to pay your broker whenever you buy those stocks for usually those calls. And in doing so, they won't even be shy about it either. They'll say, hey, you should buy 100 shares of this company, right? You should pick up a block. And you're like, oh, okay, like, do you have to sell these stocks today? Sometimes they'll tell you like, yeah, these are the stocks that we've been pushed on to sell people to today. So that's actually really cool and transparent with them, which is pretty nice. But again, if they have an agenda to push this stock, you may not want to buy it just because, well, that's their agenda. And even though they might actually truly believe in the stock, I would just keep in mind that you really shouldn't do this, because more often than not too, you're also paying to talk to these people, so you're losing money there. And let's say your stock loses another 10%, you lost a lot more than you could if you just would have bought the stock on your own. And the last, fifth worst trading method, I hate this method so much, I've even dedicated an entire video to it, is buying the dip. There's a difference between buying, like a crash, and buying the dip. So for example, and I don't even want to go into those hype stocks where people's like, everyone's telling you to buy this stock and it shoots up and you're like, oh, I missed it, and it shoots way back down. I'm talking about a stock, well, kind of those stocks too, as in, and I picked Kodak because it's a great example. It went up to $60 a share, and then it pulled back to like, I believe 50, and then the 30, and then 20, and then now I think it's at like 12 or 15. And if you would have bought the dip at $50, like, oh, it's just a little dip, it's gonna go way past 60, you lost so much money. Or even if you bought the dip at 30 or even 20, you would still have lost so much money. Now, there are ways to use this in your benefit. Obviously, if you know the stock's going to dip and keep going way down, you can short it. But I talk about that in another video. The video is called Why It Pays to Follow Dumb Money. So either way, I hope you guys got a lot of valuable information from these little top 5 lists. I appreciate all the feedback you guys have been giving me. So as always, remember to like, comment, and subscribe for more future content. Thanks for watching.